Welcome to the BrettJohnson.biz podcast, where we discuss business on purpose, radically fresh leadership, capital that transforms society, and marketplace stories that embolden difference makers. Welcome to the Repurposing Business podcast. I'm here with Amon, who is up in Rwanda. Amon, welcome. Good to have you with us.
Thank you. Thanks for inviting me.
Yep. I met Amon when I first went to Rwanda, which was in January of last year, 2025. Got to meet him and his family and was so excited when he came down to Cape Town for the Repurposing Business Executive Intensive in March of 2025. Got to spend time, and it was wonderful having him on as part of a group of executives, because we would think one thing and Amon would set us straight. It was wonderful. We had good conversations. And Amon, you've got a fascinating background. I'll just give a high level and then it'll be good to go back into your story. So as I recall, you were born in a refugee camp in Uganda because of the difficulties that had happened in Rwanda. And then you started your first business when you were 10 or 11 years old, figuring out that you needed to be able to pay for your own school fees, school uniforms, and so forth. So you started that. So you were an early entrepreneur. And you've gone on to train many entrepreneurs to bring millions of dollars of capital into East Africa in particular. You've also run a business in the US, an IT business, as I recall, and gone on to do a doctorate quite recently. So congratulations on that. And we look forward to your new book coming out in the near future. So those are just some highlights, but it's great to have you with us.
Thank you. That's a very good summary of the rest of my life, the past and the future.
There we go. Great. So, Amon, tell us a little bit about your early years. You describe yourselves as a combination of things, which is wonderful. A pastor, an entrepreneur, the son of refugees, not an economist, and yet you're involved in the economics of what's happening in Africa. Tell us a bit of your journey. How did all of that unfold from the beginning?
Well, thanks, Brett. Thanks for having me on this conversation. I think my story is not unique. A lot of people in Africa, East Africa, have gone through what I've gone through, being born in a refugee family in Uganda. My parents left Rwanda in 1950s. I went to Uganda as refugees. I was born there 20 plus years later. Growing up in a refugee family, you didn't have anything. We didn't have school. We didn't have tuition. And then you have to figure out how to make a living, make a life. Both my parents couldn't read and write, so you were born in a situation like that, and you pretty much have to figure out, how do I go from here to where I want to go? So it's a story of so many people in Africa, in East Africa, war-torn areas and countries where such as the one I come from.
So what gave you the impetus when you about 10 years old to say, look, I better do something about this and I'm going to have to figure out a way? Because back in the day, if you don't have the basics, you can't go to school. You don't have a uniform. You don't have a notebook or a pencil or certain things like that. They just won't let you in the school. So what gave you the impetus to break out and to do something different?
That's a very good question. I was 11, started school at age 11, going to school with kids that were 6 years old, same grade. So, 5 years past the school going age. When you are 11 and going to school with 6-year-olds, what is going in your mind is, why am I here? Do I even belong here? But then the bigger question is, why do it? What is the motivation? Because at 11, you're not smart enough to know what education means. So I take it back to divine providence, because there's a lot of kids that were in the same village as me that never went back to school, never learned how to read and write.
Yeah.
So for me at 11 to make a decision and say I am going to work and pay for my tuition, I don't think it was based on a lot of understanding or genius or anything. I think it was divine providence because God had a future on me,
Mm.
and He made it possible. So I don't want to say I was any different, any unique, or any smart. I think I really believe God had a plan, and He wanted me to go through school to be where I am today and to do what I'm doing in the kingdom.
Yeah, yeah. So you got going, you went to school, and eventually you finished school. And then what happened in your journey from there? Because I'd like to touch on the different pieces of what you were doing.
Yeah, well, I went to primary school. We call it. I was in Uganda. Went to primary school, so that was 7 years of school. Went to high school. Did a bachelor's in business in Rwanda. Long story. After the 1994 genocide against the Tutsi in Rwanda, we came back home to Rwanda. Went to college. Did 4 years of business school. Went to the U.S. and did a master's in management, did a MBA in finance, and just recently graduated with a doctor of business. So that's kind of been my school journey. So you would say I've been in school for the last 40 years of my life. Now with a good sizable break, but really started, as I said, I've been working since I was 11 and have never stopped working. So you
Mhm.
could say I've had a dual career from 11,
Yeah,
working and going to school.
yeah, yeah. Yeah, so it's interesting. So there's a third strand to your story, which parallels my own story, which I love, which is you've also been involved in, I mean, you're a pastor of people, you care for people, with or without the title. It's what part of what you've done with your life. So you've really had the work, the studying, and this pastoral caring for the spiritual life of people and communities, actually. Tell us a bit more about that.
Yeah. As I said, from age 11, I'm recognized, and I became a Christian at age 10.
Okay.
So, from age 11, I am seeing the hand of God in everything that I do. And I know from the beginning that I'm on a mission to serve God. Back then I grew up in church. So the easiest thing I thought about to serve God was, be a pastor, start an orphanage, help the poor. That's how we were educated in the church. When religion first came, that's what we were told. You become, as a minister, you become a pastor, you start an orphanage, you help the poor. And we
Mm.
did all that. But I always felt there was an itch within me to address poverty from a capital perspective, from an investment perspective. I always felt like there was something missing in the way the church was addressing poverty.
Yeah.
Um, and that's how I found my way in business. And I would say that I have spent more time and more energy in business as a mission
Mhm.
than I've spent in the church as a pastor, though I've done both.
Mhm.
And honestly, I am on a mission right now to discover, where does God want the church in terms of building abundance through enterprise. So that's a very big quest of mine,
Yeah.
and I have a lot of opinions about it, biblically based opinions about it. But
Yeah.
yeah, so it's been a beautiful journey being in charitable work, doing ministry in church, and empowering community through enterprise.
Yeah. So what's been interesting for me about your approach, Amon, is that um, you've been able to understand the world of the traditional world of charity. You know that handouts don't work, and you want to see people become owners of capital and owners of a base rather than just recipients of aid. And at the same time, you've given a lot of aid. You've helped a lot of people. You've given a lot of free meals and other things. So talk to me a bit about those two.
Yeah, I think it goes back to the creation mandate, to the creation story. We can trace back charity, back in the Bible. So it is there, God requires us to help those in need,
Yeah.
absolutely biblical. We are called to win souls, absolutely biblical. but we are also called to be fruitful and multiply and fill the earth. So we are called to create
Yeah.
value creation. And I think that where we go wrong is when we take a continent like Africa and bundle it into a charitable and soul winning mission, which to the greatest extent, that's what Africa has been. Africa is where we go to help the poor
Yeah.
and to win souls.
Yeah.
Africa is not where we go to create value.
Yeah.
That is done in Silicon Valley and, real estate somewhere in Hawaii. But, in Africa, we'll go there and we'll build houses and we'll build orphanages and we'll win some souls. We'll do pastoral training. But really, when you look at the biblical mandate, there is so much raw materials in Africa. There's so much resources that are ready to be transformed into value.
Yeah.
And value transformation of resources into value
Yeah.
is a creation mandate as well. So really, when you look at it, we have a triple creation mandate. Create value, win souls, and help the poor. But Africa, to the largest extent, has been a two-legged stool instead of three legs. So the
Yeah.
third leg, which is creating value, creating abundance, has
Mm.
been largely neglected in the mission field.
Right.
And in the areas where it has been used here, it's been through, I hate to use the word exploitation, because Africa has always created value for export.
Yeah. Yeah.
Investors come here, raw materials, minerals, create value and export it, cotton and coffee and all that. So we are in a season where we are asking God and saying, okay, God, we can see that you are requiring us of a three-legged stool.
Yeah.
We've seen the abundance of charity and
Yeah.
we've seen the abundance of winning souls, but where are the factories and where is the value creation through enterprise? Because that too is a biblical mandate.
Yeah. Wonderful. Yeah, I'd love to double click on that a bit, because one of the areas you mentioned, coffee, for example, and your family's been involved in the coffee business for 50 years or something like that, a long time. And so you take a situation, you've got somebody, they got a small piece of land, they're growing coffee, and Rwandan coffee is good. I roast my own coffee. I appreciate good coffee. And so Rwandan coffee is fabulous. But how do you go from there to, being somebody who's a subsistence farmer into impacting the business and the whole value chain? Tell us a little bit about what you did with Jubilee Coffee.
Well, we'll start with, you've got a poor family in a small village. They've got an acre of land. They are using it to grow, some beans and some potatoes, which is really not even that fruitful because the land has no fertilizers, there's nothing on it. So, maybe they are making $1 a day from their 1 acre of land. And they are coming to us for charity. Well, can you sponsor my child? Can you help me with meals? Okay, you have an acre of land. You are making $1 a day on that acre. But surprisingly, that same acre of land can produce up to $5,000 a year in coffee harvest.
Yeah.
So you're talking, going from $300 a year, $1 a day to $5,000. What is the difference? The difference is, yes, that that piece of land needs seeds, improved seeds, needs fertilizers, needs technical know-how, you need training. The land is there, the family is there, they've got the labor, they've got the land. What they need is capital, which is
Yeah.
both knowledge capital and tangible capital.
Right.
So the investment on that acre is probably another $5,000. So
Yeah.
if you are investing $5,000 on a piece of land, let's even think of it as a pure enterprise. You are investing 5,000, you are harvesting 5,000. As an investor, you're taking $1,000 from the land, which is 20% return on investment. The family is keeping $4,000, which is almost 13 times more revenue.
Yeah.
So really what you've just created is an enterprise using resources you already had And the way you did it is you stopped looking at people as recipients of charity and you started looking at them as creators of value. So
Yeah.
that's pretty much what we've done. We've gone and found people that are able-bodied, they can work, they
Yeah.
have some sort of resource that needs revitalization through capital,
Yeah.
and the rest is history.
Mm. Yeah. Yeah. What I love about that is investing in the real value of work, real value creation. In the Transforming Society book, I think it's also in the Investing with Africa book, the notion of God places raw materials in the earth, and then we collect those, we work, we create markets, and so on. And you've described that in part. There's obviously another part, which is so the guy's got his beans, and then how does he get them to market? Did you do something to close the cycle from raw materials to here? You've got a commodity, there's a market, there's an ability to get that, because some guy who's out there with his 1 acre doesn't necessarily see the rest of the picture. What was your story there?
Yeah, and that's really when people have always known value chains. Business people have done value chain. We've studied value chains in school. But when we come to Africa and we look at a piece of land, we can't think value chain. We are thinking, oh, these people are making $1 a day.
Yeah.
Well, if you can start thinking of it as a value chain and say, okay, we've got a farmer with an acre of land that can grow coffee, coffee can be harvested. How do we process it? What is the cost of processing it? Where does it go? It is exported. A lot of coffee is not consumed in Africa, it's consumed in Europe and North America and Asia. How is it exported? So it's a value chain. And
Right.
this is standard business, standard economics, standard enterprise. And it does have a certain level of sophistication.
Yeah.
But when you think about value creation,
Yeah.
value is always created at the bottom of the pyramid.
Yeah.
Then, after value is created, everything is value addition.
Mm-hmm.
So, when coffee is grown and harvested, value has been created. Then, from there on, it's value addition. And
Yeah.
for every value addition, there is a premium for value addition. There is an enterprise around value addition. So, the hardest part is value creation.
Yeah.
So we have, to answer your question, we've walked through the value chain and, touched at every touch point of value addition, all the way to, we call it from soil to cup,
Mm.
and everything in between, because
Yeah.
you have to close the loop. If you are going to empower the bottom of the pyramid, you have to figure out this value that has been created. How do we do value add to the point of consumption?
Yeah.
So the loop is closed. So we've had to work through the entire value chain from the bottom up.
Yeah. So tell me a bit about equity across the value chain, because historically with extraction, if you take anything, still goes on. Asset colonization is alive and well and living in Africa, unfortunately, with raw materials being taken out, processed overseas, and so on. We all know the story, but tell me what you did to change the thinking along the value chain so that the investors who are financially literate, smart, etc., they understand it. It's almost that people with more knowledge can exploit the people with less knowledge. So how did you address that? I mean, you've worked on, as they say, both sides of the pond. You've worked in multiple countries and you've worked with people up and down the value chain. What's been your thinking around that and what have you done with that?
Yeah, so when you look at the bottom of the pyramid, when value is created, the question is how far up can the value creators go?
Mm.
Because value creation is the lowest level of compensation.
Yeah.
Value addition is where more money is made. So yes, I have produced a bag of coffee. It's green coffee. It's harvest coffee. It's raw coffee. Okay, I have to dry it.
Mm.
There's a lot of people that sell their coffee before it is dried.
Yeah.
So there is a value add to dry. The dried coffee is a different price.
Yeah.
There is a hulling, removing the husk, that's a different price. There's another layer to create green coffee. There is roasting.
Mhm.
So the question is, if you're creating abundance, if your mission is to exploit people, you buy the coffee from them before it is dried, because then you can extract maximum value because you are owning every stage of the value creation and the value addition process. So it always goes back to, how do we empower people at the bottom of the pyramid to understand and to be empowered to own as much of the value chain as possible?
Yeah.
Can they own it all the way up to export? Probably not. Can they own it all the way to green coffee? Go from owning one stage to owning 5 stages.
Yeah.
The income doubles. So that's where I talk about yielded capital, which looks at, all right, I am making a 20% return on my investment,
Mhm.
but how much value am I creating? I call it the community value multiple. How much value have I created in the community with my 20%?
Okay.
Can I take a 100% return on investment if I have created 1,000% in the community? I say yes, 100% by all means do.
Yeah.
Uh, can I take a 20% if I have created no value at the bottom? You
Yeah.
probably shouldn't. That is dishonest. So it's always about who owns capital and how much of it are they willing to let go so they can create more value at the bottom of the pyramid.
Mm.
So that's why I say we need more human, ethical, responsible, what I call yielded capital.
Yeah. Yeah. So you're getting people to say, okay, look, I mean, we go, okay, so we understand return on capital, return on investment, and so forth. And historically, if you look at capital in its many forms, spiritual, environmental, social, intellectual, and so on, the term sheets are weighted towards financial capital. I mean, and that reinforces the concepts of mammon. Um, and so that's a problem. So you're saying, okay, let's talk about what's fair in terms of a return for the community, a return for people with intellectual capital, a return for people with social capital, a return for people with all types of capital. And can you still do okay with your financial capital and take into account other types of capital? Am I hearing you right?
Absolutely, 100%. Capital has always been stacked, right?
Yeah.
Um, Capital is stacked from the top to the bottom. The problem is when capital gets to the bottom, it starts to behave either as charity or as exploitative.
Yeah.
As you go higher, the stack are very clear. You've got your, family offices putting money into private equity, creating a portion into venture capital, and
Yeah.
some of it into debt. Debt finds itself into the bank. Bank lends on collateral. So you've got the whole capital stack well defined at the top, and everybody takes a slice of the pie. Now, when capital comes, because eventually all that capital is going to end up at the bottom to create value, because all those capital games happening on the top, they haven't really produced any value yet. The
Yeah.
private equity, the venture capital, the debt equity, all these, bonds and all the financial structures, they have not created value yet. They're just playing around with the dollars that are moving between pockets
Yeah.
and creating some sort of a transactional, but eventually the money has to get down to where value is created.
Right.
And capital has been stacked in such a way that it will extract the maximum from the value creation and push that value up so more of the people can share it at the top.
Yeah.
So the question I have is, how do I make sure that as the owner of capital, I am looking at how much of it is left at the bottom?
Right.
I am involved not only in worrying about my portion, but worrying about the portion that stays on the ground, which I
Right.
call the community value multiple.
Yeah.
Now, is that something that economics wants to see us do? is that something that enterprise and business schools want to see us do? They don't teach us that in business school.
Yeah.
But really, what makes a business last for 100, 200 years is if that business, by accident sometimes, is creating value for the community. The value it extracts is lower than the value that it leaves within the community. That business will live forever. That's a business I want to invest in because it has security.
Right.
The enterprise we've had in Africa for many years, from colonial times, these enterprises have taken more than they have left on the field.
Yeah.
How do you know? Because Africa is the same from 1800s to today. Nothing much has changed.
Yeah.
So to answer your question, yes, as the owners, responsible capital has to look at how is the capital stacked, how are the rewards stacked, and who's the loser in this capital stack. And it's always been the value creator.
It's a very interesting term, the capital stack, as you talk about it, because when you talk about the deck being stacked against somebody, then it's unfair by definition. So the term capital stack, maybe we need a new term on that one. We'll have to think about that. Yeah, I love that. I love the community value multiple. It's really, really good. And I know when the economic crash happened in 2008, I was writing my book, Repurposing Capital, in 2010, looking at Islamic finance and so on. And at that stage, prior to the 2008 crash, about 97% of the money that was transacted on a daily basis in the world was money chasing money. So it was derivatives, it was all the financial instruments that you mentioned. 3% was actual goods and services, coffee beans moving or corn or maize or whatever it might have been. It was just money chasing money. So that's when capital becomes a god unto itself, where, real problem. Yeah, so I'm glad that you unpacked that. So now it's not that you're against banking. You've had your hand in community banks and so forth. So tell us a little bit what you've been doing on the community banking side, on the banking side, because there needs to be an ecosystem that supports the actual value creating businesses and so forth.
Yeah, I believe in banks. I believe in derivatives and private equity and all forms of capital because capital has to grow if it is going to continue to produce good. Which is the beef that I'm trying to figure out around charitable donations. And I'm saying, okay, some donations could have been capital structures such that they can multiply at the bottom instead of being consumed. So there's a lot of charitable donations that have been consumed that should have been capital structures so that they can continue to do good in the community. So we want to be able to unbundle that and look at charity and say, well, this portion should be a capital instrument, and this portion is purely helping those in need because we should.
Yeah.
So then back to capital, the capital structures, including banking, financial instruments, these are very, very important. We need them. But as you said, how do we structure them in a way that is not exploitative?
Yeah.
So banking has been exploitative in Africa. We've seen microfinance institutions taking more taking more than they are giving. We've seen families swimming in debt, selling property and going back to zero.
Yeah.
And the conversation has been, well, we are investing into very risky profiles, so we have to have higher interest rates.
Right.
But in the end, what happens is maybe you shouldn't have come into this risk because you took a higher interest rates, but you left people with nothing, So we need to revisit how are we structuring financing at the bottom of the pyramid in a such a way that we leave more than we are taking up. So to answer your question, I'm not against banking. I'm just saying that banking has to be done right, which is what we are working on now. I'm involved in several financial institutions, and we're figuring out how to do it in such a way that capital is rewarded, but the community also walks away with more than what was taken.
So a lot of this is a heart issue, right? I mean, it's a heart issue hiding behind financial language around risks, returns, etc. And so, somebody told me, investing in a building in Detroit versus a building in Zimbabwe, you just 2x it and say, I need twice the return out of Zimbabwe because of the risk. But some of that risk is manufactured risk, and some of it is a set of metrics that suits traditional banking, and it's not actually true for what's going on the ground in terms of the actual risks. So the perceived / manufactured risk from a financier's perspective, it's a bit of a disconnect there. So I'm glad that you're jumping into that. And yeah, so I know that risk is a big topic in Africa, but there is a different way of thinking about it. And you have to understand what happens in a community, what happens in a culture, what happens in a society. You're not just looking at an individual with their 1 acre back to the coffee grower. You're actually looking at somebody who lives in a context. And yeah, so I like your point about, you don't get rid of charity completely. I mean, there are times in the Investing with Africa book, which you kindly gave me lots of comments on with the title, Don't Shoot the Messenger. So appreciate your feedback on that. One of the things is to think about the zones in Africa and to say, look, some situations, actually, you have to lead. There's a role for the church to be the leader and the NGOs to follow. But the NGOs should be working themselves out of business if they're honest in a way. They should be saying, okay, I need to get out of this position and not create myself as a permanent intermediary of charitable capital flowing in. Have you seen instances where charity has plugged a gap and then it's led to something else? I know you've been quite involved in helping just thousands of people set up little businesses. Talk to me a bit about that.
Yeah, well, thank you. Yeah, so I mean, my wife and I, we've run schools, we've sponsored children, we've run 7,000 children through our sponsorship program. We've helped families, and I've trained business owners. But now I'm at a certain age, as you can say, I have a gray beard, and I think that the greatest disservice we've done in how we deal. I'll take a sip of water here. In how we deal with poverty is that we segregated the capital stacks. We have the charity stack, the banking stack, the microfinance. Now we've got the venture capital, the private equity. I think when you show up in a community that is experiencing lack, it's all the above. Because I can take you to a small community in Congo where they have minerals in the ground, they have diamonds, they have gold, but the people sitting on top, the children sitting on top of the gold are not going to school. They have no clothes. There are no schools in the area. So I can come and be on the top and, provide uniforms and school fees and blah, blah. Or I can come with the private equity and actually get into the minerals.
Yeah.
But what happens when minerals start flowing in a community that has no school, then if people are working in the mine, they can afford to pay tuition. So I can actually build a for-profit school in the area because private equity is making, gold and diamond money flowing. So it's not really about, in my opinion, it's not charity comes in and then we bring another model. It is an integrated model.
Yeah.
So I look at it this way. If I make my balance sheet or my P&L, I want to say, okay, on the left-hand side, this is my P&L. On the right-hand side is a community P&L.
Yeah.
On the left-hand side is my balance sheet. On the right-hand side is the community balance sheet. Okay.
Yeah.
Coming in, this is the asset value I want to leave in the community. I want to leave families with 1,000 acres of coffee.
Yeah.
But to do that, I need to make a return of 15%. Well, there is so much risk that I cannot get my 15%. But if someone provided the seeds and the fertilizers, then I can make a 12%. Okay, now I need to find someone to provide the training. So the
Yeah.
training plus the seeds and fertilizers plus me doing the, let's say, the farming, then the three of us, I am getting a 15%, which is a requirement as a private equity fund. People gave me their money. They want me to make a return. But
Yeah.
I can so I can't invest in this village because this village cannot give me a 15%, which is my hurdle rate. But I'm going to partner with someone else to allow me to get a 15%, also to allow me to invest in that village that I would not have chosen in my
Yeah.
undertaking. So it's the church coming together and saying, how do we transform this community in a way that is sustainable?
Right.
If we don't come together, the charity is going to be pursuing the poorest of the poor, and the
Right.
capital is going to be looking at who is able to give me a return today.
Right. Yeah. You're reminding me of an article one of my colleagues wrote many, many years ago in 2000 or so, 1999, called Networking Charitable Capitalists. And I love the idea of saying, okay, there's a role for everybody to play. Now, and a traditional investor would just say, I can't get 15%, I'm out.
Yep.
Whereas an integrated capitalist would say, okay, so who else can make a contribution? There are nonprofits who want to give seeds, or there is a nonprofit that will do a well that'll provide the water, or there's a business that'll do the training, a business that'll do the business training or provide a business incubator. And I think part of what mitigates the risk is when you've got a network behind something. And part of my challenge, frankly, is getting investors to think about investing in a fund of funds that will invest in the ecosystem that sits behind the farmers, the miners, the bankers, and so forth. Because if you invest in the ecosystem, it's good for everybody, and that sometimes requires a bit of a fund of funds approach that says, okay, if we look across the whole value chain, if any part of the value chain breaks, the risk goes up. So let's invest in the people who are doing the business incubators, the training, the transportation, logistics, storage, marketing, and so forth, and not just one or 2 points along the line. Is that something similar to what you've been seeing and you've been noodling?
Yeah, there's a closeness to that. I think that the big part is that if I am a capital structurer, if I structure capital, structured finance, let's call that. I'm structured finance. I want to finance, let's say, buses in the village.
Yeah.
I want to finance the buses. I want to securitize them and put them on a stock market and sell them as a structured instrument. Okay, that's what I do. I'm good at that. But there's a risk because the bus drivers are not well trained. I can't be doing structured finance and training bus drivers. So, and I shouldn't be investing in training bus drivers because that starts eating into my structured instrument. So then again, it goes back to the church has to come together. We have to work together and say, hey, I am doing driver training. There's a charity doing driver training. But we don't have buses. Once we are done training, can you give them buses?
Yeah.
Sure, I'll buy them buses. I'm a bank. I'll buy them buses. Great. Structured finance. Can you list this SPV on the stock market? Okay,
Yeah.
I'll create an SPV and list it on the stock market. So it's different layers coming together. I think the biggest part where the biggest loss for investors in Africa has been is that people have come into the area. They realize that to make any money, you have to handle the entire value chain.
Yeah.
And they try to do it all.
Yeah.
But again, to their defense, if they don't do it all, there's no one else to do it.
Right.
So the answer is, how do we come together as a body to say we are descending on such and such a village? You do this, I'll do this. There's a fivefold ministry. That's why, there's a fivefold ministry in the church. We are not all evangelists and we're not all pastors. The same applies to believers and how we handle capital. So it's really not let us do everything. It is, can we be the church where if the hand is not the leg and the leg is not the hand, but they are part of the same body?
It's interesting when I started doing work on the global giants type of concept and having a fund that can tackle global giants, the fivefold ministry thing comes into account because, unfortunately, much of the structured finance or traditional finance is geared towards the managers who will keep things going and de-risk things. And then you've got the crazy people who are out there willing to go out there and hack their way through the jungle and blaze trails and so forth. But you need the collection of spiritual gifts and the collection of spiritual leadership gifts if you're going to be able to look at the whole value chain. You need the prophetic that says, God is working over there. There's something over there. We have to go and do something over there. And we think of the prophetic, for example, as risky, but it can de-risk a situation or reduce risk because of the insight that God gives. But we also need the people who are going to be the just boots on the ground, practical, blocking and tackling people that get some of the starry eyes, church parking lot deal things out of the way. So I like your reflection on that. And the combination of things, which requires having a bigger goal than getting a return on investment. It requires the goal of what does it look like to transform the village? You talked about descending on a village, and same is true for a city in the US. Pick a city, whatever. We have to understand what's going on, who are the players, and what are the roles of all the different players to collectively work together, because no one player is going to win it all. And unfortunately, much of the VC type thinking that is being brought into Africa, but is like, okay, we're looking for unicorns. And as I pointed out in the book, we have real animals in Africa. We don't need unicorns. We need the ability to farm things, to work things, not just to the occasional winner. We're looking for herds of things, not the occasional giraffe sticking its neck up. Yeah, good. Yeah. So the biblical theology, transformation, capital, finance, you see these things as integrated things. And you could have stayed living in the US. You're back in Africa. And what's your hope for Africa as you're sitting pretty much dead center in the middle of Africa? Seems to me that way. What's your hope for Africa and how you're seeing that unfold?
Well, I have a lot of hope for Africa. I believe that God is building something. There's a story being built, and I'm glad to be part of it. Of God's story in Africa. My hope is that biggest hope is that Africa can see itself for what it's always been, and the world can describe Africa the way they have always known it. So the way Africa sees itself is not the way it has been or it is, and the way the world describes Africa is not the way it has always seen it. So there's a little bit of an inverse description here. So if Africans can see themselves for who they are, which is created in the image of God, endowed with endless resources, 60% of the world's arable land is in Africa. If we can see ourselves in that light, and if the world can describe us in the way they have always seen us, as a source of gold and diamonds and ivory. We can't talk about ivory now, we're protecting animals, but as a source of wealth. Right now we've got, the lithium batteries, and we've got the uranium, and we've got the tungsten. So much is happening in the world of technology and AI and microchips, and lots of minerals coming from Africa. But the story on the TV is a starving child. So you are asking yourself, how corrupt and how insensitive do you have to be to come for the uranium and the lithium and the minerals that make microchips for you to do AI, but when it is prime time, you're playing an image of a starving child.
Yeah.
And you're not talking about what you saw when you went to pick up the minerals. So there is like a deliberate narrative that needs to be rewritten. So And how do we rewrite that is if enough of us can say, okay, there is value to be created, we will fund the value creation, we will leave as much of that value on the ground as possible.
Yeah.
Then we can start looking at Africa as a player in the global ecosystem in all areas, in church planting and ministry, in wealth creation,
Yeah.
in labor. But this inverse of where Africans don't see themselves the way God sees them, which has been a narrative that has been written in their minds for a long time, that
Yeah.
it is actually now stuck. And this idea of a child in North Carolina is thinking of Africa as a starving continent, but they
Yeah.
are holding an iPhone that has a microchip that was made from African minerals.
Yeah.
It's the highest level of hypocrisy
Right.
that needs to be undone.
Hmm.
Now, is there enough group of people that say we have to undo this hypocrisy? I hope there will be. I am seeing the array of hope. And I want to be part of that story, of rewriting the story in the way it is supposed to be written, not the way it has been corrupted.
Yeah. Well, let's dig into that. I remember at the executive intensive, I showed a little video, which you know well, about a particular case of what happened in a country in Africa. I think it was Uganda or something, where a community began to, pull itself up by its own bootstraps after a huge disaster and so forth. And it made for good American TV, let's put it that way, because the part that was inserted, as you pointed out, was that, then came an American charity that taught us how to do generosity, and then everything turned around. Whereas in reality, you pointed out, no, this was the community way, and it didn't take an American charity to come and highlight a few verses from the Bible. The people already knew this stuff. And so there is a vested interest, I hear you saying, and if you're not saying it, I'm going to say it. There's a vested interest in making Africa look like a charity case. Why? Because you can raise dollars off it. I mean, this happens. A hurricane goes through Haiti, and the NGOs raise money to go and help in Haiti, but really they're raising money for the NGO industrial complex often, which is, a small percentage of the charity might find its way there. Now, different organizations have better track records than others, so I'm not comparing, Samaritan's Purse with the Clinton Foundation. I don't know what their stats are, but just to pick different ones. But there can be a vested interest among charities to raise capital of the poor Africans. I remember when I grew up in South Africa, I was in Africa, and if you left food on your plate, your parents would tell you, remember the starving children in China. That's now they seem to do pretty well without me. Yeah. And so you get this myth, this notion of things. Now, what I'm a bit concerned about is that flows over into the world of capital. People say, oh yeah, I'm going to allocate 1% of my portfolio, or 3% or 5%, 10%. I'm a really, really generous guy, to no return charitable capital in Africa. That is not really empowering. It's not really looking at the ecosystem. It makes you feel good from a PR perspective or from a conscience perspective. And I'm sure it'll do some good. But there's a danger with that as well, right? So when we look at the whole concept of faith-based people investing in Africa, one has to watch out that we don't fall into the same trap as the NGO industrial complex has, where there's some good that's come out of aid, but there's also this giant machine in the middle that sucked up a lot of capital. Your thoughts on that?
Yeah, well, thank you for mentioning that. I think the big one for me is charitable money is a very small check. When you look at how much money comes to Africa in form of charity, charity makes a lot of noise, but when you put it on paper, it's very small.
Yeah.
But most of the budget is spent creating a narrative. because for
Yeah.
every dollar raised, there is another dollar that advertised, oh, we got the poor and the starving and the dead and the hungry. So by the time you're done advertising your charitable revenue to create your charitable revenue, you've scared away the investors because
Mhm.
your charitable narrative screams risk. So me as an investor, I'm less likely to invest in Africa after seeing all this charitable advertisement, which brainwash me into believing Africa's risk in terms of investment. It's a
Yeah.
great investment for donations. So what
Yeah.
do? I'm gonna say 10% of our profit goes to the poor.
Yeah.
Well, what you didn't know was if you actually gave that 10% as an investment to Africa, you could actually have multiplied the community value
Right.
more than what your 10% did in terms of charity. So
Right.
it goes back to the charitable dollars are very small in terms of a percentage. If you do research, you find out that countries that receive the most charity tend to be the poorest. So
Yeah.
there's actually a verified research that shows that charity has a reverse effect on economic development.
Yeah.
Now, all that doesn't mean we should stop charity. It just means that we need to stop looking at charity as a solution to poverty. We need to
Yeah.
start looking at charity for what it is, which is helping those in need.
Yeah.
But a solution to poverty is value creation. Value creation taps into capital, and capital looks for return. And
Yeah.
returns don't like risk.
Yeah.
And risk can be mitigated and managed.
Mhm.
So then we come to risk. A lot of investments in Africa right now are beating global investments. You can do research again on that. So, as you said, risk is a perceived risk,
Yeah.
but there is enough advertisement that the risk actually starts to feel real, but it's not. So
Mhm.
it goes back to narrative. How are we building the story of creating abundance for Africa? How do we unbundle the story? How do we get the church to understand the mandate, which is, restoration and making sure that we are being fruitful and multiplying.
Yeah. Yeah.
So
Yeah.
there's a lot to be revisited around and us as the church to understand the role of capital and the role of charity. I think there's been a lot of commingling, and
Mhm.
very few have been willing to engage with the story and say what is happening in this black box.
Yeah. Yeah. Very good. Very good. Yeah. Speaking of black boxes, Africa, I was just listening to somebody recently. I was at an event with a lot of, hundreds of people, and somebody mentioned again the country of Africa. And it's a Freudian slip. I understand it, but we do have this. Africa has become a bit of a black box, and with such diversity from North Africa down to Southern Africa, Central Africa, West Africa, the different economic zones, the thousands of languages, the culture, and so forth. And that diversity can sound like risk and it can sound like riches. It can sound like opportunity. And so you've lived in a number of countries in Africa. You've done business in many countries in Africa. And how do you recommend people get out of the black box in terms of, well, that's Africa over there, and get a more nuanced understanding of Africa? Um,
Yeah, I believe that the idea of picking a country as an investor, sometimes it is on the lazy side,
mhm,
which also, we know in investments, high risk, high return. So it's really about how much risk do you want to take on?
mhm.
If you're a very low risk person, there are some places you shouldn't go to get your very low returns. All right. So that's clear. But if you have a risk appetite, um, then yes, Africa is in some places there's a high risk. But the risk is beside the point. I think for me, the big part is what community value do I want to create with my dollars?
Yeah.
So and I'm going to do that through investment. Now, every business has its own risk profile. So I can start a restaurant in New York, or I can start a restaurant in California.
Yeah.
The rules are going to be different. The supervision of the kitchen is different. The
Yeah.
licensing is different. We are within the United States, but two states different. If I'm
Yeah.
going to, that's why, funds are set up in Delaware. Why? Because the rules are different in Delaware than they are in some other state. So
Yeah.
even within the United States, for every business you're going to start, you're going to look at the risk profile.
Right.
So the idea that investing in America is not risky is a false narrative, because
Yeah.
for every enterprise, you have a risk profile.
Right.
So we know there is a war going on in Congo right now. Okay, risk profile. I'm going to plant, I'm going to grow potatoes in the Congo. Well, actually, it might be an advantage that labor is so low because people don't have jobs. You can grow your potatoes quickly. Can I
Yeah.
get them out? I could. Where can I sell them? So it's not about, oh, South Africa is risky or Kenya is risky. It's about, I am going to be involved in telecommunication. Okay, I want to add value by making sure people communicate.
Right.
How am I going to open my cell phone tower? Okay, if I open it in South Africa, it is safe. If I open it in the Congo, it's not safe.
Yeah.
But what am I trying to do? I'm trying to make people communicate. So what do I have to do to make sure that Congo communicates?
Yeah.
So as a responsible businessman, you still wanna get your 15% return,
Yeah.
helping people communicate better.
Yeah.
And the middle is the risk profile.
Yeah.
So then you start assessing risk and mitigating risk. So we've talked about concessional loans, we've talked about grants, we've talked about fast loss capital. There is an international finance corporation that wants to take fast loss in your tower. You
Hmm.
know, so all these different solutions to make sure that people communicate and capital gets the return that it wants to get. The
Yeah.
lazy part is, oh no, I can't put a cell phone tower in a war zone in the Congo because it's going to be
Yeah.
stolen. Well, let's go and put it in Singapore.
Yeah.
Well, that is not yielded, that's not responsible investment. Responsible investment says, I am going to make sure that people in the Congo get a cell phone tower.
Yeah.
What do I have to do to make sure that every tier of capital gets its return
Yeah.
and people are able to communicate?
Yeah. So the purpose of the business, keeping the purpose of the business front and center,
Yes.
put the risk into context. So if you don't have a clear purpose, you don't have a context for framing risk for the different players. You're really just playing with a spreadsheet. I mean, you could just be sitting behind a desk in Chicago and playing with a spreadsheet if you don't understand purpose. And and yet, if you've got a clear purpose, the people in the Congo need to communicate for various reasons. Then you can find solutions to the risk in the capital stack. You can say, okay, what can we do innovatively that can address risk, that can deal with risk? And we don't want a riskless environment because it's a returnless environment. We actually don't mind a high risk environment, but we're just going to be open-eyed about it. And
Yes.
we're going to link the risk assessment to the purpose of the business. So you're saying that every business needs to have a clear purpose?
I'm saying that no business should exist to make money. The chief end of capital is not to make money.
Yeah.
Uh, we've had, the chief end of a business is to make money for shareholders.
Yeah.
Uh, that needs to be revised. The chief end of business is to create value for society
Yeah.
and be rewarded for the value creation.
Yeah. Yeah.
So every business must have a purpose that is beyond making money, and money is a reward for doing good. Profit is a reward for what you've done. It's not the objective of what you're doing.
Yeah.
Now, you need to structure profitability because you need to scale. If you're doing a cell phone tower in Congo, you want to do one in Sudan.
Yeah.
But the Congo one should finance the Sudanese one. So you continue to provide value to more war-torn areas with the cell phone towers. So we have to price in the growth to continue serving the mission, and also to be rewarded, which is absolutely acceptable to be rewarded. People talk about, Elon Musk is making a lot of money. I say, hey, if we are rewarding the man to send us to the moon, we would be happy to reward him. Now, did he set out to make sure we can explore the skies? If that's the mission, he's doing a great job. Did he set out to be a trillionaire? If he did, he's making, I don't want to make a lot of comments around that. But going back to what we are saying is, what is your mission?
Yeah.
And how do you build a business model in such a way that the mission is accomplished,
Yeah.
the mission is multiplied, and you are well rewarded for the work that you've done in making the mission accomplished. So yes, every business must have a mission.
Yeah. Yeah. Well, Amon, thank you so much. I think you've wrapped up really, really well. You've made a great case for repurposing businesses, which is good, and for rethinking capital. I love it. I love your perspectives that you've shared. Been very, very helpful. And do you plan to release your book sometime soon?
Well, if I was Brett Johnson, it will be out by tomorrow. This is my first book, so thanks for reading through it. But yes, I'll be counting on your art of releasing to see if we can release it sooner. But yes, it will be out soon.
And thanks for your partnering. Thanks for being a thought partner in thinking through these things, and appreciate the work that you're doing. And look forward to seeing how this unfolds. There's much to do in Africa, a huge continent of opportunity, and an opportunity for capital that's tied to purpose, and that's unstacking the stacked part of the capital stack so that we see a community value proposition, value creation at the community level. Love your thinking on this, Amon. Thank you so much for being with me today.
Thanks for having me.